Hey everybody, this is Chris, and in today's episode, I'm going to talk to you about the 8 important documents that you're going to need to provide to make sure that you clear to close in 15 days or less. So let's go. So the first document to provide if you're employed is a W-2. Now specifically, it's going to be the last 2 years of your W-2s if you are not a self-employed. So what I mean by that is today is December of 2021, which means that the W-2s that you're going to need to provide is for 2020 and 2019. Now, if you switch job, let's say in any of those years, so for example, 2019, then you're going to need to provide the W-2s for both companies that you were at for 2019 plus the 2020, the current job or current company that you're working at. So the second type of document that you're going to need to provide are pay stubs. Now, the pay stubs that you're going to need to provide are the most recent pay stubs, specifically that pay stubs that's covering the last 30 days or the most recent 30 days. Now, it doesn't, if you didn't get paid recently and your pay period was a few weeks ago, then that's okay, but it has to cover at least 30 days. So if you're semi-monthly, that means it's going to be for your pay stubs from the 1st to the 15th and then 16th through the end of the month or however it is. Depending on when you're able to get those. And then if you're bi-weekly, it's going to be for the every 2 weeks. So it's going to be covering 28 days, which is almost 30 days. And if it's weekly, you're going to have to provide 4 weeks worth of pay stubs. And the reason for this is because the underwriter wants to make sure that you are gainfully employed, that you're earning your income. And for us as a loan officer, we need that to calculate your DTI, which is your debt to income ratio. Now, the third form of document that's critical for you to provide is some form of identification. Now, typically the identification is going to be a government issued identification of either a driver's license or a government issued ID of sorts or a passport. Now, if you are a permanent resident alien, then you're going to need to provide your permanent resident alien card or a green card, and it's going to have to be scanned from front and back. And the reason for this is because the underwriting team needs to confirm who you are, who you say you are. It has to match what it is on the documents. Now, one funny story about IDs is there's like an urban myth about in the mortgage industry where this person on their ID, on their driver's license, instead of signing their normal signature, they thought they wanted to have a little bit of fun. They were a little bit earlier and younger in their years. So instead of doing their normal signature, they put cat faces, 3 cat faces on below their picture as their signature. And so finally, person grew up, they're about to buy their home, and they're at their settlement table, and the notary says it needs to match exactly what's on their ID. So this person needed to sign all his legal documents for the mortgage, for the title, for the deed, with 3 cat faces on each signature section. I thought it was so funny and amusing. But so hopefully you're not one of those where you have to do 3 cat faces and you can actually do a normal signature, because I'm going to tell you the attorneys or the notary is not going to be amused. Now, the fourth type of document that you need to provide for a refinance is going to be your mortgage statement. And the reason for the mortgage statement is because the underwriting team has to confirm, you actually do have a mortgage and connect it with the lender that you say you have it with, and that's tied to the credit report, as well as we need to understand what is your payment right now, what is your P&I, your principal and interest, and it's kind of like semi-validate that tax and insurance on the mortgage statement. But additionally, your mortgage statement is also going to tell us if you have a deferment, if you have a forbearance of sorts. And so because of, we're coming out of COVID right now, or we're still in COVID, but, because of the COVID situation and people coming out of the forbearance or the deferment, on the mortgage statement, it's going to tell us if you are in it or not. And if you just recently came out of it, then you need to have at least paid in full the deferment or have had at least 3 full mortgage payments before you qualify for a refinance. So a mortgage statement is critical. Now, if you own multiple properties and there's a mortgage tied to those properties, we're going to need a mortgage statement for each one of those properties, regardless if it's a primary home, second home, or an investment property. The fifth document that you need to provide is your homeowners insurance policy. Similar to your mortgage statement, the homeowners insurance policy needs to be that you need to submit has to be for all properties that you own. So primary home, investment property, second home. Even though you're not refinancing those properties, the policy is going to be important because we need to calculate your premium, which is your liability that you have for those properties, so that we can calculate your DTI, your debt to income ratio, correctly. Now, an important thing about this policy is we need the actual policy document or the declaration page. Now, if you don't know what that is, then just provide the entire policy document, including all the blank pages, and we'll figure it out on what to provide to the underwriting team. Now, we cannot accept a screenshot from your phone or a screenshot from your computer. It has to be the actual policy document or the declaration page. Now, the sixth document that you need to provide are bank statements. And the bank statements for a refinance typically going to be to show that you have enough assets for the closing cost if you're deciding to come out of pocket for closing. Now, if you have enough equity and you can roll in your closing costs for the refinance, so you have $0 coming out of pocket, which is kind of like the zero closing costs that everybody's kind of talking about, you're financing that into your loan, then you don't need to really show proof of assets because you're going to be financing everything in. But if you're deciding to come out of pocket and not finance that in, then we need to show that you have enough assets to cover the closing costs. And normally we're going to need at least 2 months worth of bank statements to provide to the underwriting team to show that you have those assets. And the reason for the 2 months is because we need to show that that money is seasoned for at least 60 days. And we need to show that you have enough assets for the closing costs if you're deciding to come out of pocket for it. Now, the other reason for having the bank statements is because if you own multiple properties, investment properties, then we need to show that you have enough reserves in place for those properties, for those liabilities that you have in place, even if you're renting them out. Now, the seventh document that you need to provide are tax returns. Now, typically, if you are employed, so not self-employed, if you're employed, you don't need to provide tax returns for conventional loans for most of the big wholesale lenders. And the main reason is because you're going to sign this thing called a 4506C, which is a certification allowing us to pull your tax transcripts and verify your taxes and that there's no tax liens on or against you. But you need to provide your tax returns if you are self-employed or if you own, your own, let's say, business, a C Corp or S Corp or something. We're going to need both your personal tax returns as well as your business tax returns. Now, if you own multiple properties, then we're going to need the tax returns because your properties are going to be on one of your schedules. So the big thing to understand about this is you have to provide your full tax return. You cannot black it out. You cannot password protect it. The tax returns needs to be in full, and it can't be just the first page because we need to see the complete picture of how you submitted your returns, especially if you're self-employed, because we're going to be calculating your income based on your tax returns. Now, one important thing about the calculation of your income is this is not calculating your cash flow. This is calculating your net or adjustable income based on the returns that you've provided. And this is a big conversation that I have with some CPAs as well as a lot of my self-employed clients is, hey, I'm making $2 million in revenue. Why are you calculating my income differently? And that's because, while it's $2 million in revenue, if you're deducting a bunch of deductions and you're only earning, let's say, $10,000 a year, well, we're going to use the $10,000 a year after all those deductions because, the way you file tax returns with a CPA is completely different than the way we look at and underwrite your file and calculate your income for underwriting purposes to lend you money. Now, the eighth and last document is an optional document as well, kind of like the tax returns, depending on your situation, is your HOA statement. Now, if your property is not part of an HOA, so you're free and clear, you can just X this out and you're done with the list. But if your property is in an HOA, then an HOA statement or a coupon book is required. Now, there are 4 specific data points that needs to be included in the HOA statement or the coupon book. And those 4 are, number 1 is going to be the HOA name, the association's name. Number 2 is your name, the borrower's name. Number 3 is the property address. Number 4 is the HOA dues, so how much you're paying or how much is required to pay. Now, similar to the HOI, the homeowners insurance, as well as the mortgage statement, the HOA statement is required for all properties that you own. So not just the property that you're trying to refinance, but for all properties. Now, with all of this, if you provide all of these documents that's necessary up front, and if you haven't seen my video, I provided a tip on the 4 most important things that you can do to ensure that you have a clear to close in 15 days or less. If you provide all of these documents up front, then I guarantee you'll have an increased chance of closing your file in 15 days or less for a refinance. I've had several clients where they had multiple properties, but they were active and they provided all these documents up front, and we were able to close them in 15 days or less. Typically, it's about 10 to 12 days of clear to close is what it takes, because it's a 1 day or less of conditional approval, and then typically the client is chasing the HOA for these statements because of all of these documents. The document that's hardest to obtain, or takes the longest to obtain, I should say, not the hardest, is the HOA statement. And so with that, I hope you've enjoyed this video. If you did, please like and subscribe and comment below. What did you like about it? Was this helpful? Is there any other questions that you might have? Just let me know and I'll try my best to address it in the next video. Appreciate it. Thanks.